Welcome to the Introduction to Transfer Pricing, a series of videos on the fundamentals of transfer pricing. In today's video, we're going to talk about the impact of a change in transfer price and how that will affect not only the profitability of companies, but also their taxes. And this is very important. In fact, we discussed in an early video as to why transfer pricing has become such an important topic. And one of the issues we raised in that video had to do with the fact that tax authorities knew that multinationals could set their transfer prices in ways that would move their taxable profits out of the jurisdiction of that tax authority, and that with a certain degree of change in transfer price, the total tax payments of a multinational company could go down. And it's the concern for this that has caused a huge increase in the amount of transfer pricing regulation and enforcement. So let's look at how this could actually happen in our simple example. So we'll go back to our simple example that we've used in previous videos where Japan Co. sells to the UK Co. at £7 per unit, selling 10 units and has a transfer price of 70. Now, let's assume that there's no interest expense in this example, so the operating profit is going to be equal to the taxable income, and that the corporate tax rate in Japan is 40, and that the corporate tax rate in the UK is 20. So let's calculate what the taxes would be if you paid in both Japan and in the UK. Well, this is pretty straightforward. You take the 10 of operating profit in Japan times a 40% tax rate, and that would equal taxes of 4, as we can see in the bottom left-hand side. And in the UK, you've got a profit of 5 times their 20% tax rate would equal taxes of 1. The collective taxes of the two added together, the 4 and the 1, equal 5. So we've got our base case now established of 5 in taxes with these sort of structure. Let's now ask a question: what would happen if we changed the transfer price? So in this example, I'm going to ask the question, what would happen if the transfer price moved to £6.80p? And we're going to recalculate the taxes in Japan, taxes in the UK, and the total taxes paid by both entities. If you want to, now's a good time to pause the video, work through the numbers, and then come back and see whether your answers matched up to the correct answer. Well, the correct answer in our example is answer B, that the decline in the transfer price is going to lower operating profitability in Japan by 2, so now profitability is going to go down to 8. And it'll have an opposite effect in the UK. Remember, as we've talked about, the operating profitability consolidated would be the same. But in the UK, with its lower tax rate, it's going to change its taxes to 1.4. So the new total tax burden will be 4.6, which is lower than what the original case was with a tax burden of 5. Those are a lot of numbers. Let's go through them one by one now and take a look at what would happen. So here's our case, and we're changing the numbers now to reflect a transfer price of £6.80p. We can see the decline in the Japan profit down to 8 from 10, and we can see the increase in the operating profit in the UK up to 7. So everything's now based upon this new transfer price at £6.80p per unit. The two P&Ls are linked together where the sales of one has to equal the cost of goods of the other. Now, let's calculate the taxes now that we know the new operating profits. The taxes, 40% on the profit of 8 is going to equal 3.2 in Japan. And in the UK, the tax rate of 20% times the $7 of operating profit equals 1.4. When you add the 3.2 and the 1.4 together, you'll get 4.6. So the total taxes with the new transfer price fell from 5.0 to 4.6, a tax savings of 0.4. Thank you. I hope you enjoyed this video, and I hope you watched the others in this series.